New Zealand versus the US dollar. The chart, we have open price, close price, lower price, and higher price. Candlestick for buy, candlestick for sell. This chart has different types. When we look here, we have line chart, candlestick chart, and above here we have a bar chart. And we use candlestick charts because of the graphics. If we use a line chart, this is what we will see. And it's not simple to trade with a line chart. And why should you learn candlesticks? Candlesticks are the fundamental basics or the fundamentals in understanding whether you should be buying or selling, and also where should you analyze or which time frame should you use to analyze the market or these graphs. Now, this is simple and easy and straightforward. I'll explain so that you understand. But what you must do for me so that you actually understand is you must make sure that your period separators are turned on. You can do that maybe by using your phone. Go to section chart. And when you go to section chart, you can see this vertical line that is actually going straight, dot line. You just tap once, you go to settings if you don't have it, and make sure that you always is always turned on. And you'll just scroll up here and you'll be able to see show period separators. Please do that for me so that you don't actually make any mistakes as to how you'll be able to read these candlesticks. Now, candlesticks are very simple and easy, and I'll explain so that you get a better understanding. Now, each and every candlestick that we see here works with what I call, or what you must note as the first thing that you must know in actually using candlesticks is time. First thing, you must understand time. Are we together? Time, it's important. Number two, you must understand we have price. Number three, you must understand that we have a structure. A structure, this is where we are able to analyze where we should be buying, where we should be selling. The price is what I've already showed you as to open price, close price, and high price and lower price. Now, when we look at high price, open price, close price, lower price, this is what we have to understand as in terms of price, and this is what forms price action. Because of, all right, maybe now I'm mentioning something that you might be confused about. Price action. What is price action? Now, when we look at our chart over here, you can see the graph is going up, right? And that's what we call a movement. It's moving up, and when it's going down, it's moving down. And when we combine the movement of down or up, we call that a price action in the most basic, simplest form for you to understand. Now, let's understand the candlesticks in terms of time, which is the first thing that we have to understand. Time is quite simple to understand, and this can be difficult if you are still new into trading, but take your time. Go and make sure that you learn on this channel and subscribe. Make sure that you subscribe. For those who need lessons, they can actually request that or chat with me. Now, when we look at time, time is very important in actually trading the market or trading this chart. So now we'll use a different chart section, which is we'll use a Euro USD. And when we look above here, we can see H1. That is actually the time. H1, and we can also see H1 over here. When we look at this is gold versus the US dollar. We can see H1 there. We can see H1. And I want to actually clarify this so that you understand what's happening here. Below here, we have these period separators. Remember, it's important to have them. This one today is on the 1st of May, 30 April, which means day 1, day 2. Are you with me? Do you understand that we have separate days? Now, this graph will now let's look at this time over here, which is H1, so that I can explain and what this graph actually means. Now, H1 simply means that each and every graph or bar that you see here, or the candlestick that you see here, this is the red one, this only one, is equals to 1 hour. Which means if we have to count together, you and I, now we can count 1, 2, 3, 4, 5, which means it's 5 hours. Are we together? So this candlestick from this 1, 2, 3, 4, 5, that's 5 hours. That's 5 hours. Each and every candlestick represents 1 hour because of the time over here. Now, when we take our mobile phone, we can actually tap once in an empty space, just once. We tap once, we'll see the time frame here. If you have an iPhone, you can also use this time frame over here. You'll be able to see it on your iPhone, right? Now, sometimes you'll be able to see it somewhere here if you're having an iPhone vision. Now, that's quite simple to see. Here is an explanation. You can tap on this time frame over here if you have an iPhone vision. Now, you'll be able to see the time. Then, once you're able to see the time, since I've mentioned that this is everything that is representing one bar or one chart, it's representing 1 hour. What happens now if we change to 15 minutes? That's 15 M or M15 is 15 minutes. Each and every bar will now represent 15 minutes, which is quite simple to understand. Now, we have this line here that is red and blue or green. Now, above, we have a line for buy, which is the ask price. And below, we have a line for sell, which is the bid price. Are we together? Now, these two lines, in between, we have a spread. And now we're touching something that might a bit challenge you as to your learning about candlesticks. Now, let me explain a bit more. This is NZD, which is Australian dollar versus the New Zealand dollar. Below here, we have the time. This is the time. And this time is counting. If right now we go to section codes, we tap here, we'll be able to see the time here. And this time might not match with this time over here, which is 10:57, which is, you can see here, it's 8:57, depending on the broker that we use. And now we're talking about brokers. Bozza, what is broker? We have another tutorial in this channel. Please make sure that you watch more of what actually I'm teaching here on this channel. This time here is actually what? Counting. And after 15, no, let's say you can check this one, is counting. After it actually goes to, these are seconds, these are minutes, these are hours, right? Are we together? And then now we have these two prices. We have these two prices. In between, we have a spread. If we minus this price or this price, we will get this spread. And that's why when we actually click, or let's say right now we click on this one, we click on new order, we make a sell, we will start at a loss because of the spread. Are we together? Now I trust you to understand actually what's happening here. So let's actually continue to understand the candlesticks before you actually have some questions on the comment section below. Now, since I've explained that each and every candlestick represents 1 hour, right? If we change time frame, it will represent that time frame. We have a buying line here, which is horizontal. We have a selling line, which is horizontal here below. Are we together? That is simple to understand. And now, there's something that you need to understand, but that is not important. It's just for you to have a way better view. The chart mode, which is the chart, is linked, or it's actually controlled by the bid price, which means if you look at the candlesticks, let me show you in a moment so that you get to understand as to what is actually happening. Now, if we look here, if we look closer, because some of you, I know you have some very you have some questions as to you want to ask Bozza. Okay, I hear that you are teaching, but there's something that I need to ask. This chart is actually linked to this, which means the graph is linked to the bid price. That's simple, but it's not important for you to note. Right, let's continue now. Why should you learn candlesticks? You learn them based on that. If right now we have to analyze as to knowing when to buy, we go to chart section here and we look at the time frame over here. We go to higher time frame, which means, let me just now clarify the time frame so that you understand. From the 1 hour here, from the 1 hour above, let me just write that down for you. From the 1 hour up until the MN. This is time to analyze a structure. What is a structure? We are analyzing a pattern of the market can actually go down or can go up. So if it goes down, what are we looking for? We are looking for a bounce, which means we are looking for the market to be bouncing off the below line, and we're looking for the market to be bouncing to the up line. Now we have a basic strategy for you to get started in this channel. Please watch that so that you learn more about the bouncing off and off. This is what we call we have below here, we have a support area, and above we have a resistance area, which means it's quite simple to understand actually for you to know where to buy and when to sell. But then when we look at the candlestick as to reading the whole chart, it's all about understanding the time. The price that I talked about is this price. You saw that I've mentioned that we have this price over here, price for actually buying, price for selling. Now these two prices, they form the candlesticks. They form the candlesticks. So this one, which is red, is responsible to color this candlestick red. This one is responsible to color the candlestick in a green or blue color, which is quite simple and very easy to understand, or simple to understand. Now, looking at this chart or this graph, let me explain something so that you have a better way of trading in the market. We have a higher price, we have a higher price, we have lower price, and we also have a lower price on this side. Now, we buy at the lower price, we sell at the higher price. Now, listen to me carefully. The lower price and close price, they work together to form a structure, which means we only interested in the price that is actually at the close and open and low. Now, in this case, let's say right now we were to actually buy here. What do we need in order for us to buy? We need this. We need to put a horizontal line here. We can just do that by using this horizontal line, just like that, and move it here. Now, we wanted 1, we wanted 2. On number 2, this is where we're actually looking to buy, because there is what? There is a bounce off. Now, when we look at here, we can copy this. We can copy this and copy it, duplicate, and put it below here. When we look here, we have a lower price and we have a close price here, which means we are looking to buy at the lower price and we're looking to sell at the higher price, which is, this is an area where there is demand and above there is an area of supply. All right, let's continue so that you understand, because this is actually the structure of the market, and we use this body. This is what we call a body to confirm an entry of buying and selling. And when we confirm an entry of buying and selling, we use what we call a candlestick pattern. Candlestick pattern are quite simple to understand. These are the actually candlestick pattern that I have over here. We have a hammer, bullish engulfing, and we have another tutorial on this channel so that you get to understand as to what are hammers, what are bullish engulfings, what is happening here. These are the candlesticks that we have and we use for buying and selling. It's quite simple to understand. But then once you do understand everything that is happening here, and if you have questions about, Bozza, what is this week here? This week is a rejected price, which means if right now this candlestick close and open, let's say it opened here and closed here, but before it actually went down here, it first went up and went down. But then I don't want you to be confused with that. That is not that much important, but it's just for you to know on what's happening here. You can see we have this rejection. That means that it went up before it went down. Remember, 15 minutes. On 15 minutes, we have another time frame that is 5 minutes, 1 minute. That time frame, let's just make sure to understand. 5 minutes and 1 minute, which means this candlestick represents 15 minutes. But if you go to 5 minutes, we will be able to see other candlesticks that are combined to form what? To form 15 minutes, which means there are candlesticks that went up and the candlestick that went down. But before the 15 minute closes, those candlesticks actually went down. So that's why you'll see this, what we call a rejection, which is not really a rejection, by the way, but it's a rejection in 15 minutes, because all combined, if you combine this and this, you'll get what? You'll get a 0, which means this, we minus actually. We minus. So if we combine this and this, you'll be equals to what? You'll be equals to something like this. Which means if we combine this body and this body, it's not combining, we subtracting this body to this body, you will have this. But if you only change the time frame, are we together? Trust you to understand that one. It's quite simple to understand. So the candlesticks, as I've showed you, this is what you're looking for. You're counting one, because the market can only create only two possibilities. It can go up like that, and it can go down. But if it goes up and it goes up, it goes down, it goes up for the second time, where it turned, that's where we're looking for a selling entry. Simple and straightforward to understand. If you have any questions, please let me know on the comment section below, so that I can actually guide you in a better way. But for those who need mentorship lessons, please let me know on so that I can actually assist you much better. So we have explained the time, that this time from H1 to MN is a time for you to analyze the graph, the structure that I've just showed you, but you can also watch more. 15 minutes, from 30 minutes to 1 minute, this is a time for finding entries using what? The candlesticks. But we're using candlestick what? Candlestick pattern, not just candlesticks. So this candlestick is just for you to get a basic understanding as to what are the fundamental principles as into actually using candlesticks and how to read them, which is quite simple. Remember, the candlesticks, they have an open price here. They have a close price for the buying. For the selling, it's open price is above and close price is below. And then we have higher price. Higher price is always above. Higher price is always above. It does not change. Lower price is below. Lower price is below. Are we together? Simple to understand. Now, on an iPhone vision, it's much better, because you can be able to see these numbers here. You see these numbers here. These numbers, in simple way, simplest sense, it's just a price. If we divide here like this, we divide here like this, we divide here like this. On number one here, this is the open price, this is the higher price, and this is the actually lower price, and finally we have the close price, which is quite simple to understand. Trust you will actually have a better experience as to trading. And then when it comes to candlestick pattern, it's quite simple. We have this F icon over here. I'll explain in much detail in our actually next tutorial. So stay blessed. I love you all. If you have any questions, let me know. The chart, let me just give you the here. Tap once, you come here. The line, the type chart, or the chart type that we actually use. We use the candlestick chart, but here they say line chart, line type. Okay, anyway, it's fine. They say chart type. Anyway, they call it whatever. But then bar chart, we don't use it. We can use candlestick, which is much better, has better view, and the graphics are more nicer and clear. You can also use the line chart, which is quite simple. I love you all. Stay blessed.